Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Roque with Mike Miner, Professional Ag Marketing. A mostly lower day in grain and livestock futures trade, a few exceptions like some of the wheat contracts. But Mike, let's talk about the soybean market first. The hangover that we had from the export news last week, maybe part of it, but how much of it was harvest pressure with this great weather that we had over the weekend?
In the past week here, we've seen quite a bit of harvest pressure. I think we've seen these November soybeans consolidating in this nice choppy sideways to lower trend over the past few sessions, and it looks like there could be a pause here before we have some renewed downward pressure. The last pressure we saw, I think, stemmed all from the one Argentina news that they took their export taxes off, and then China proceeded to buy 96 plus million bushels in a week. And then you immediately saw news come that it looked like we're not going to get a China trade deal done, at least until October 31st when we meet in South Korea with them, if not early 26 when we go to China. So at that point, it really gave the short side the green light to press on because it didn't look like they were going to get their head ripped off in a China trade deal or something along the way. And at this point, it's just made it easier for them to take off a little bit more and take some to the downside. And now harvest pressure, I mean, we've picked up progress a lot over the past week.
So Mike, how long can we hold, say, this $10 psychological area? We're down at support right now that's got to hold, but you've thrown a lot of bearish news already at the market.
There's a lot of technical support factors around this 990 November up to about 1005 November futures. So right around this $10 area, we're going to want to really see that hold. If it fails, then it's kind of open to the downside on where you want to run this thing to. And I feel like we haven't seen the big pressure from it yet because funds have been somewhat neutral. We haven't really had a short or long position on managed money yet. And now with harvest just starting, we could see that harvest pressure push us a little bit lower, maybe to that 990 type area is what I'm assuming. And then we'll really be at a breaking point to determine, are the funds comfortable stepping in and going short, even though we could have a potential trade deal at some point? Or are they going to try to push it really hard and then take that risk off ahead of any news prior to a China trade deal? So at this point, I think it's all about timing, and it's just going to be the appetite of risk for these funds to go short.
And Mike, with farmers hoping for a trade deal with China, obviously some of them are going to have to sell off the combine, but would like to do a reownership strategy. So are you getting a lot of questions about that?
Yeah, one of the most commonly asked questions at this point, especially in the last 2 weeks, have been, I got to sell all my soybeans at harvest. What do I do with them? And it's been a really big conversation, and most areas are dealing with it. You have a big corn crop coming, so you're going to tie up a lot of your storage with that. What do I do? And especially from in the Western Corn Belt here, our basis levels have really got hit hard. Our storage rates are very large as well. We have massive lines at some of these soybean processors. So not as many people have been going directly to like an elevator, but more direct towards a soy processor. This has opened up some opportunities, I would argue. For one, home storage will be big. And two, if you have to force a sale, what reownership opportunity looks best for you and your business, especially as we go towards the bottom end of the trend here towards this $10 November area. That's really picking up some steam, Michelle.
Yeah. So the corn market, did we see some harvest pressure there? Or did we just run up into chart resistance again, Mike?
I think it's all chart resistance. I think you're battling back and forth between some support levels around 415 on the December futures and kind of that gap up there a little bit higher. So from my perspective, technically, I think this corn market looks very strong in this upward channel. You've seen a lot of really nice cash fundamental sales, especially to Mexico over the past week. We've seen good demand. And then also you've got this disease pressure, which is also helping us from the perspective of your crop is probably shrinking. And if you look at spreads, they've started to narrow up on the corn side pretty decently. And usually that has a pretty good indicator of telling you, hey, you know what? Maybe the biggest crop is in. Maybe we can get this thing to rally a little bit. And I've been watching those spreads, and I see some really interesting things, I think, from a narrowing or strengthening perspective.
Well, that's some good news, obviously, for producers. Of course, we do have quarterly stocks report out tomorrow, especially in the case of the corn market. Do you think there was some squaring ahead of the report tomorrow just on fear that, hey, we could find a few extra bushels or not?
Yeah, especially so this old crop that's sitting in the bins as we go into new crop. In the Western Corn Belt, especially, we haven't seen elevators get real pinched. It seemed like they had plenty of available supplies going into this new crop harvest. And I would expect that this old crop balance sheet is going to find a few more bushels in tomorrow's report than what they had previously estimated. That'll be something to watch. Maybe that's one of the small reasons why we kind of consolidated back to some of these support levels in this corn market or haven't ran harder, just waiting to get this report out of the way. Because historically, they do trade this report quite aggressively. So it's going to be really interesting trade tomorrow at 11. And then it will go right into just trading new crop fundamentals, crop size, demand, all of those things, Michelle.
And Mike, wheat ended mixed today, but it looked like we got a little support from the higher dollar. But do you feel like that market is still searching for a low here?
I think you're watching the dollar and you're also looking between the correlation of wheat and the corn market. The grains have been trading very close together lately. If you look, soybeans have had a mind of their own a little bit lately, but corn and wheat have kind of been trading together. And so, just from a grains perspective, one of the things those two both have in common is the US dollar export opportunities. So, the downside from here has been mostly played out. It sure seems like this has been a down market for quite some time. It just seems like it's been enough of a limited reward that no one's wanted to really bet on the long side in this wheat market. So continue to watch that one, but it just seems like it's the same story all over again for this wheat market.
Okay, cattle market set back, but in the Fed cattle, the cash market's kind of holding us back there, isn't it?
Yeah, it seems like the cutout is kind of what led things. I mean, we tore a $40 chunk off of the cutout in a pretty aggressive hurry. And with that, I thought cash followed pretty quickly. The last few times that we've seen cutout take a break for a few days, it wasn't able to move cash lower at all. And this time around, it did actually. And we're also seeing something else. I think the shortage of Mexican feeder cattle has made the southern market a little bit stronger than what the northern one is. And from a seasonal perspective as well, that makes sense. And now we're seeing, 237 type numbers in the south and then 232 to 235 in the north type area. So we're inverted now between those two numbers. And that's the first time in quite some time. So I thought it was interesting that we've torn cutout lower here, $40, but the cash actually moved lower with it, which was something quite new. From a numbers perspective, production year to date, we're down like 3.6%, I believe. Just the past 8 weeks, though, it's pretty large. It's about 7.5% of a hit here in production, and your kills about 6% lower year to date at this point in this cattle market. So at this point, we're still not finding any more cattle. The supply situation doesn't seem to be changing. We could be getting out of a hole here pretty soon from a seasonal perspective. We'll just have to keep an eye on that as we change seasons, Michelle.
Yeah. But feeders have been the leaders. We had a higher weekly close on the futures last week, and the cash market really hasn't slowed down there. So, can feeders help lead the fats back higher, push this market back up into those highs?
Well, the good news for future going forward is that the feeder cattle market's very hot. It means they're not there. Still plenty of people that need to buy them, and at this point, it seems like that's a good supportive fundamental. And looking further out, when those are going to have to get killed, we should have tight numbers still. So that's good. It's going to take a while for us to start building this herd up at all. And just from a technical perspective, this 20 to 40 day moving average that we've been trading back and forth pretty aggressively on feeder cattle continues to hold. So watch that 40-day moving average. I'd say, Michelle, that's been a key support here real recently. And this intraday volatility has been just crazy on cattle.
With the hog market so close to contract highs and with the funds record long, do you think they will continue to push the hog market higher or not?
It's a little disappointing. After last week's Hogs and Pigs report, I was expecting something more out of this market. They just haven't traded it very aggressively on Friday or Monday here. So it was a little bit weak, I thought, of a reaction to that report. So that they probably could have been a little bit more of a buyer out of that. But the problem is, we're already at very high levels. The funds are very long already. How much more can they push that market? Other fundamentals, the cash market's okay. It's tad softer, but nothing crazy. The demand's very good. Cutout has been the focus of the trade and probably still will continue to be. Cutout at this point hanging above 110. Cutout in beef has taken a leg lower, but pork, it doesn't seem like wants to move that much. So a very interesting case study there between the two proteins kind of competing against each other. So that's going to be something to watch. Supply side, very friendly numbers still, especially with the report last week. I think we're in a really good spot here, and the deferreds would agree with me in these futures markets. So it's a crush market. It's a hedger's dream right now on this hog market, and I think people are just going to keep plugging away on this hog market.
Okay, thanks so much. That's Mike Miner with Professional Ag Marketing and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.